live. It is Tuesday morning. Just had a holiday. Yesterday was September 4th, Labor Day. Hope everyone had a good time. The markets were closed, and we're back in business again today. So, what's our goal today? Same as every day. Make a little money and walk away while we're ahead. So, what we're looking at here is up in the upper left-hand corner, we got the Russell, and we're going to move that. We're going to move the Russell. I like to have the Russell down here, the S&P up in the left corner, the Dow in the top right, and the NASDAQ in the bottom right. Now, I always do that because I want them to always be the same every time. I want to double check before I get trading, so I know that what I'm looking at without having to look at the headers. I just have them always in the same spot. So S&P, Dow, Russell, and then the NASDAQ down in the bottom right corner. Now, these are the daily charts, and so I'm just kind of looking at the overall long-term daily charts. I want to see what it looks like from a bulls and bears, from a Fibonacci standpoint. This looks like to me we're making an ABC pattern to the downside, actually. So if we come in here and look, we got a peak up here, we got a valley, and then another peak up in here. So this is a down ABC, and it looks like it wants to start going down. Now, obviously, this could be an ABC to the upside. It could be coming in here and go up. A, B, could make a little pullback here and start to rally and go up and test previous highs. So every time you look at a market, there's always multiple ways the market could go, which is obviously the dynamic nature of the markets, which is what makes a market. A lot of people are bullish on this market. A lot of people are bearish on this market. One way we can determine that, of course, is by looking at the news and see if there's any news events that are coming up that might drive the market one direction or the other. Last week, we had some good news. We know that the uh, market was starting to rally because we had some good news, and so that caused the market to pop up. But this week, let's look and see what we've got. GDP ticked up just a little bit last week, and that caused the market to rally. But this week, let's take a look and see. Usually we have pretty good trading days after the day after a holiday or a long weekend, and that's because traders are excited to get back to the markets. They want to make some money. They want to come back. They've been off. They took a day off. Markets were closed, and so everybody's excited. They're all sitting in front of their computers. They're waiting to push that mouse button and make the market move. So we'll have to wait and see, but usually the day after a long weekend is a good day. The market generally has some good trends in it. People are excited to trade. Today, we don't have a lot of really good news. We don't have anything that really seems to be moving the market hard. At 8 o'clock, we have factory orders month over month. Previous was 2.3, and we're looking for the consensus is down minus 2.5. So the consensus is that we're going to have a negative 2% forecast on factory orders. That's not positive, so we're looking for a bearish market in that regard. And then 8 a.m., we got another one, IBD, the tip economic optimism. So the previous was 40.3, the consensus is 41.1, so it's forecast to be 42. And so that's good. I get a little bit of economic optimism in there, and that could push the market higher. So it'll depend on what the factory orders are doing, whether, the optimism can push the market along with it. So that's what we've got going right now. We got about 4 minutes to the bell, five minutes to the bell. Let's remove that. So 8 o'clock, we're going to be kind of watching a little bit for what the market might be doing. Let's go back, and this is again the daily chart, and so we're a little bit bearish on the daily chart. This pattern is bearish, but of course it could be the 2 bars back and then the rally. If it breaks that previous high, take off and run. So we could be to the next leg up, but this is on the pullback right now. We need to see bullish pattern to break the previous day's high, and that would turn us into a bullish market once again. If you're familiar with my setups with Elliott wave and Fibonacci, we know that this is an X1 up in here. This is an X. So this comes down here. This is X1. This is X1, 2, 3. So this is a A2S, I think. Is that right? I have to double check my cheat sheet and take a look, but I think that's an A2S to the downside. Not real fond of, let's see, X1, 2, 2S to the short side. This is going to be, this is an X1SA1, X1SA1. So Not real fond of X1S, A1s. The probability on those are very low. We talked about that before. We're really looking for the probabilities, and we have a probability table where we can look and find out what those are, and we measure those out on the Elliott wave scale with Fibonacci projections, and it gives us a symbol or a number, and then that tells us what the probabilities are. And this is a very low probability trade for the long side. It's more a higher probability to the short side. But probabilities are what they are. This could be an actual ABC to the upside. We're just looking for it to break the previous high. So let's go in and take a look at, I want to come down and let's look at a little bit longer term time frame chart. We're going to come down and look at the mini indexes. This is a 3-minute chart, and I just want to see where the highs and lows are right now. And we can see on here, we got the highs up in here. We got the lows down in here. We got the highs up in here. We got the lows down in here. This is the pre-market session. Now, of course, we're in the futures market, and so there isn't a traditional pre-market session like we have in the stock market. But because these are stock indexes, they trade like they are stocks, right, out of the New York exchange. We're trading actually over here. Let me put this up for you. We're trading futures through the Chicago Mercantile Exchange. This is not the New York Stock Exchange. When trading in Chicago, there are no pattern day trading rules, and you can open an account with as little as $5,000 and trade long and short as often as you like, penalty free. So you remember that this is the futures market. We're in a different exchange, so they have different rules. It's not the same as over in New York, where you have to have 25,000 or at least 30,000 to day trade. You don't have to have that in Chicago. The exchanges don't require that over there. So you can trade as often as you like, penalty free. Do this, you can, but to do this, you need an amazing live trading platform. And that's what Track and Trade is. It's a platform designed specifically for trading the futures market. Now, of course, Track and Trade has a stocks version as well. You can get both over at trackandtrade.com. You can get a 14-day free trial. So what I would recommend is you run over, get your software, get it installed, get back here. Market opens in 1 minute, but start following along with me. If you haven't got your software all set up and ready to go, you can do that. There's some videos that come along with the software up in the help menu that tell you how to get this thing all set up and ready to go. So we're going to watch the morning bell. Obviously, we're coming in here with a buy signal right in here. If it breaks those blue lights on that little trend line right there, I'm not real fond of getting in on the opening bell, though. The opening bell oftentimes goes up, pops down, rallies all over the place, and goes crazy. Sometimes it breaks that buy signal and just takes off and goes to the moon, and you kind of have FOMO and wish you would have got in on it. But more often than not, I just kind of sit this morning bell out as it goes crazy, especially on a day right after a holiday where lots of guys are going to be excited to get back in and start trading. So I don't like to compete against the morning bell very often. What I like to do is I like to wait for the first 5, 10, or 15 minutes and see if we don't establish a sweep. Sweep is what we call it, where the market goes up, it breaks out all the orders to go long, and it turns around, comes back, hits all the stops, sweeps out all the bottoms. I had an old buddy used to call it taking out the weak sisters and the shoestring salesman. That's what he used to call it. So this is kind of the sit aside and watch it go moment. And we'll see what happens here. We got the, this is the 3-minute chart. I generally like to go down to the 1-minute chart when we start to ring that bell. Speaking of ringing the bell, why don't you go ahead and subscribe and ring the bell so that you'll be notified whenever I make these live videos. Because if you don't ring the bell, you won't know when I'm coming live. That's the whole name of the game, right? Okay, there the market goes. Okay, so the first break was to the downside on the Dow. So we draw our trend lines here. Remember, there's one up for every down. We just don't know how far the up is going to go, and we don't know how far the down is going to go. So we need to wait for nice setups that can give us a break indicating that the market's going to go one way or the other. I like the A, B, C, D patterns. That's my favorite, and that's what is the highest payoff, and I want to play the ABC patterns, of course, when I'm live, because I don't want to take a lot of big risks, because I want to give a good presentation. I want to show you guys how to make a little bit of money and walk away. And that's the name of the game. Our goal is $500. We'd like to just see if we can't make $500. Once you make $500, you got a little cushion, and then you can wait and start trading some more. But we want to get that little cushion in the morning before we start trading more. And then it depends on the next setups and the triggers and what we want to do. But we don't want to over trade. That's the whole thing. Take 1 or 2 trades, and that's really all we want to take to reach that $500 goal. If we immediately go negative on our very first trade, well, get stopped out with a loss, then we have to go into recovery mode. Now that's my strategy. I like to go into recovery mode just to recover that loss and then get back to green. And then there's always lots of trading setups. Now this market's not going as wild and crazy as I thought it might. It's being a little bit more cautious than I thought it might be. There was a nice little setup right there, 3 bars back. So we had the rally, the pullback. See if that thing holds. Oh, look at the Russell fall like a rock. NASDAQ had a huge rally up and then popped right back down. We're getting a clearing bar here on the Dow. The S&P is being a little stubborn. Let's just wait and see. The reason I like to watch all 4 indexes is because they generally all travel the same. If you look, the patterns are almost the same here in the pre-market session. And so we expect that to continue. In the market, you'll notice that these markets generally will travel the same, almost exactly the same. And what happens is we have a leader, and then the others will take off, or we'll have a lagger, the one that takes the longest to go. But generally what I like to do is let the other 3 go and then wait for the lagger, and the lagger, the one that's the slowest to go, that's the one I want to trade. Doesn't matter which one it is, just wait for the one that's the slowest to move in the direction that all the others have proven that they want to go, because the slower one will generally follow the rest and is just the lagger. So I like to use the others as indications of market direction and then trade the lagger. That's why I like to watch all 4 at once. But look at the Russell. Holy cow, that thing's dropping like a rock. Now remember, the Russell 2000 is the 2000 small caps. So they're small stocks, small cap stocks. The Dow 30 is the 30 big markets. The S&P 500 is the 500 big, what they consider to be their favorite picks for the 500 best market stocks in the market. And then the NASDAQ is the 100 biggest and best on the NASDAQ. So the NASDAQ, of course, is heavily tilted towards the tech firms. So Apple and Netflix and Facebook or Meta, and they call them the FANG markets. Of course, they're not FANG anymore because Zuckerberg changed the name of his company. But it's Facebook, Apple, Amazon, Netflix, and Google. So that's the FANG groups. Netflix, and then we're gonna have to do Meta instead of Facebook. All right, we're getting no decisive moves right here. This is why I don't like to just jump in and right out of the gate off these marks. I thought we'd have a little bit better decision out of the opening bell because of being a Tuesday after a holiday. I thought we'd kind of have some decision, but we got no fundamentals to tell us which direction to go. Really, we didn't have any good news just right before the bell. We don't have any good news, any big news coming up. The 8 o'clock bell is the best we've got, and it's not a real high mover, big mover and shaker. We've got the VWAP. Notice that the NASDAQ is just kind of bouncing back and forth across the VWAP. A lot of traders will use the VWAP as a trigger for entry. And a lot of people like to trade that NASDAQ. And so if the market bounces back and forth across that NASDAQ, they're going to have a lot of traders getting in and getting out, getting in, getting stopped out, getting in, getting stopped out, because it's bouncing back and forth across the NASDAQ. Notice that we're getting a lot of topping tails and a lot of bottoming tails. I am using the Heikin-Ashi bars. We can turn those off just so we can see what everybody else is seeing. Most other people use just the normal bars, and you can see this is what they look like. I like the Heikin-Ashi bars because it's almost like an indicator in itself. Changes the price bars. They're, candlesticks have been the most popular style of bar, but the newer ones, they've been around a while, but they're the newer versions are these Heikin-Ashi bars. And the Heikin-Ashi bars are just kind of modified candlesticks where they kind of do a little mathematical formula to smooth them out. There's a smoothing component in them. So I oftentimes will say that they're lying to you. They're not exactly the lows of the day. The highs are correct, but the lows are mathematically smoothed. And so that's why we get nice trends in here. And so that's why I use the ATR to kind of give us these points where the market's changing and breaking above the average true range using the Heikin-Ashi bars. Just makes it look nice and smooth. And you can see the ups and downs, one up for every down. Remember, there's one up for every down. Now remember that the market has to close above that yellow dot. That yellow dot is the average true range. And I got the average true range. We'll come in here. I'll show you. Average true range is set to 1 and 1. That's all it is. Just a very simple 1 and 1. Nothing fancy, but it's on the Heikin-Ashi bars. And that's just telling us when it's crossing over the average true range, or the average true range of the market. And then I'm looking for continuation of the trend. And you see the NASDAQ is really ugly, having all these higher tails and lower tails, upper tails, lower tails, bottoming tails, topping tails, however you want to call it. But that's an indecisive market. And so because the NASDAQ is being very indecisive, it's not being nice and smooth. See, this is what we're looking for. We're looking for markets that have a reversal, and then they start going the other way, and they have all these nice higher lows, bottoms, just nice flat bottom trends up, or nice flat top trends down, with those average true ranges following right along with the trend. Those are the beautiful moves that we want to get into. The Russell is the one that's dropping. That one's the one that would have been a good one to get into. I like to trade the Russell. Russell's a good market. I often tell people, if you're just first getting started, trade the Russell. And if you're experienced and have a lot of experience and you're anxious to ramp yourself up and make more money, everybody always wants to make more money, then you can trade the NASDAQ. NASDAQ's the biggest market. That's the one that doesn't have to move very far to make a lot of money, but so it doesn't have to move very far to lose a lot of money. So we just wait for things to look at the NASDAQ now. Going crazy again, just bouncing back and forth across that VWAP. A lot of people trade that VWAP. They think if it falls below the VWAP, they got to go short. If it breaks above the VWAP, they got to go long. And so as soon as it breaks above the VWAP, people are going to start going long. They're going to put their stop in there. The market's going to come down. It's going to stop them all out, and then it's going to go again. So we'll watch and see. So see how it rallied above, pulled all the way back. We're getting some nice trends to the downside. So we're going to watch this thing and see if we don't get some confirmation to the downside. I don't like to see all the markets going in one direction except one, and then it's going in the opposite direction. That's not a good thing. We don't want to see that one. We don't want to see that. That's not what we want to see. What we want to see is we want to see all three markets, all four markets kind of doing the same thing, and then just have that one that's a little bit slower than the rest, but still doing the same thing, and then that's the one we want to trade. Now, again, I mentioned earlier that I'm looking for the ABC pattern. So we're looking for an ABCD pattern. So you can see right here, A, B, C, and D. So this was a nice little ABC pattern. Did it break that previous high? It didn't quite break that previous high and started to drop. So if we draw our trend lines in there, it's one up for every down. So there's an up. Here's the down. Now we look for an up. But I want to see a follow through and a continuation. Now we may get a small up, right? That would be the ABC pattern. So we get an A, B, get a little small up, and then continuation in the downtrend. So that might be what we're looking for here. That's what we might be getting here. But it needs to be decisive. I want to see it be more decisive. With the NASDAQ going up and the Dow going down, the Russell going down, the S&P going down, it's indecisive right now, right? It's indecisive. There's no reason we have to jump in too quick. We're going to stick here for a little while together. And if we don't get a decisive setup, well, maybe it'll be a no trade day here in the morning. I'll have to go and we'll trade something a little later in the morning. But we're just going to watch these markets. There's our break on the NASDAQ. So, okay, so there we're breaking the average true range on the NASDAQ. So we just come in here, and that's just not the prettiest break, but it's a break right here. We got 1, 2, 3, 3 flat bottom bars. That's what we were looking for. Problem is all the other markets are going the wrong direction. But that might be an indication that we get a turnaround and a rally. But we need to get A little bit better confirmation of what's going on here. These markets are all going down except for the NASDAQ's going up. And again, I like to have them all traveling the same. I don't like this indecision. If you remember last Monday, we had the same situation where the markets were going the wrong direction with each other. They weren't corresponding. They weren't doing this, they were doing this. And so we had a couple of bad trades and we lost money and had to recover and ended up with scratch day. We didn't make much on the day. We don't want that. So we just want to kind of wait until we're got a little bit more confirmation. Now, I like to see this market rally up. If it's going to rally up, this is what we're going to look for. We want to see it go up and then give us a couple little bars down and then go back up again. So that's what we'll look for. That's the ABC pattern. Now, on the downside, now look right here. We're getting this downside pattern. Okay, so one up for every down. Here's our down. So we might get a little up right in here. The thing is the little up that we get, we want it to be really small, maybe a couple bars, and then to start to break back down to that reflection, that A, B, C, D pattern. Again, we're going to look for this to go A, B, C, D. Now this one made a little flag, so that would have been a nice entry point for us to the short side on that little flag. See how it made a lower, it was making lower lows, lower lows, lower lows, and then it popped up, made a lower high and a lower high and a higher low. That was a nice little flag formation. Excuse me. Need to get a glass of water. So that's called flagging. That's what we call it. It's a little pennant formation, and I wasn't quick enough to recognize it and to take advantage of it. Now look at the NASDAQ dropping with all the rest of the market. Now we got more traders going short this market, deciding that this is a great place to take a short position off that little pennant, that little flag breaking below the VWAP. So let's wait for a confirmation. I missed that little flag right there. It came in and I was running my jabbering away, talking and not paying attention. But this is a little top formation, little ABC top formation pattern you can see up in here too. A, B, C. This thing's coming down, touching the 200% projection on the Fibonacci scale right now. So we would expect a little bit of a bounce or rally back up in here. I'd like to see a couple little green bars is what I'd like to see. I'd like to see another little pattern like that. See how it comes down red? Generally get nice 4 bars, then a couple of green bars, then it drops. So that, in hindsight, looks like a nice setup. Of course, that was before the market bell, and so wanted to see the market bell take off a little bit, make a little bit of noise before we started jumping in on some of these. Let's clean up some of this. Look at the Russell. The Russell out of the gate. Nicely done, Russell. So the S&P, the Dow. The NASDAQ's the one that's being ugly and stupid. It's not doing very well. So we'll draw a couple of trend lines on here. And this thing's had a high here and another high here, another low here and another low here. All right, so let's go look at some pivot points on here real quick. For me, the options are the pivot points. We're going to go out to the first quarterly, buy a call, and see where some of these areas of the market likes to move to strike prices, option strike prices. So there's one right there, right where that last drop was. It came right down, touched that strike price, and the other strike price we're looking at, I try to put the numbers right on the strike prices. We'll see this is right between, right there. So we got another pivot point right there. 15,425 on the NASDAQ. Okay, look at the Russell. Now the question is this going to be a reversal? Go to our trading tab. Is this going to be a reversal? Is the market going to come down and turn and start to rally and go back up off of this reversal here? Or is it going to come up, break the average true range, and turn and fall once again? Look at the volume starting to fall down here, starting to drop off. You're looking at this in hindsight and say, Lan, Why didn't you get in back there? Oh my goodness, why didn't you get in? Well, because back there I wasn't confident that we were going to have a big long drop like that. Because oftentimes in the morning we get this whipsaw stuff like we're getting here on the NASDAQ. Good thing we didn't get in on the NASDAQ because that's been terrible. Okay, now we're getting the two little bars. The rally's right in here. So if we're going to get a continuation, this is where we look for the market to make just a little pullback like this and then turn and fall once again. So we get this would be the A, B, C, and that would be the reflection down. So we can put an order in here to take another short position off this thing. So I'm going to come in here and we're just going to go careful. We'll put one in and we're just going to trail up behind one price bar back. Notice the price bars are getting little tiny down in there, getting small. And so that's what we're looking for, little small price bars. The Russell would be a nice place to take another short position here too. Question is it going to break and go long? It might turn and just rebound and go back up and we miss our short reflection. It just make a reversal, one up for every down, right? In this case, we might just get a straight up. And if we do, then we miss that turn. So we want it to stay below the ATR. We don't want it to go up there and break that ATR. If we do, then we'll be back in a reversal position. We'll start looking for the market to go long and give us an ABC reflection to the upside. But in this case, we want it to come down now. We got 40 seconds left in this bar, staying below and this is the Dow that we've got our order on. Okay, look at the Russell. The Russell gave one green bar below the ATR. So, and then it came down and broke that previous low. So it already given a sell signal. Look at the S&P. It's doing the same thing. S&P looks even more bullish, like it's going to go up and close above the ATR. In fact, it already did. It's got the arrow. We got the NASDAQ trying to close above the ATR. To close above the ATR, we got to take our order to go short off because that means it's reversing and wants to go up. We want it to stay below the ATR. And that's good. Look at the Russell. It's giving me a positive to the downside. So we're going to take a short position right here in just a second off the Dow. It looks like it's going to come down and touch our order. Okay, we're short the Dow. And we want it to decisively and immediately go in our favor. If it turns and starts to go back up, I don't want to sit there and go through a big drawdown. I just get out, right? Market's not moving very far. That move right there, that's only $10. So we're not, it's not like we're risking huge money right now. I haven't got a stop in yet. I'm just going to wait and see, because if it just bounces up and starts going against us and doesn't prove that it wants to be decisively to the downside, we'll just get out. Because I don't want to have a big drawdown that I have to recover from. So here we go. We're on our way down. Now, oftentimes the market, we're not the only ones that got in right here. Other traders got in right here too. And sometimes lots of people put their stops in, and so the market will want to come back around and stop them all out. So we'll have to wait and see. Now our goal again is, now we're up $100 at this point. We're going to risk this $50, this $100 for more. I don't want to get out right now. It's breaking and testing this previous low. But if it does go back and I start losing money, if it shows weakness, which would, if it went back to my break and to my entry point, that would be weakness. I want strength to the downside. Strength to the downside. And if it doesn't stay strong to the downside, stay below my entry point, I'm just going to get out and we'll just wait for another one. Because we just don't want to take losses. That's the name of the game. Just don't take a loss. Once you get your stop move to break even, you wipe the sweat off your brow and sit back and let the market make you some money. See if it won't push through. So our goal, we can come in here and add an OCO in here. And we can put a little target out there. We might make it all the way to $500 in one trade, and that would be a great thing. But usually we don't. Usually we have to take more in one trade to get to $500 when we start off with a single. We're starting off with a single just because we want to get that little buffer in there. We want to get a little bit of green going for us, get a little money in our pocket, little change to ring around, so that we're not feeling like we're trading up against that 0-0, the red day, right? We don't want to start off our day red. That's no fun. So we'll get a little bit of money in here. What we're going to do is I'm going to come in here now And I'm going to start trailing. I'm going to trail down. We can trail one price bar back, or we can trail on the ATR. This time, let's go price bars back, and we'll just go 1.1 at this point, because the name of the game is higher highs and higher lows, and lower highs and lower lows, right? And if the market stops making lower highs, why stay in? It's no longer in the downtrend. All right. So we're up 140 bucks. If it comes back around, stops us out, and at this point, I don't want to crowd it, because the market doesn't seem real anxious to go down anymore. We're going to come in here and put this on the ATR, and we'll just kind of hold our stop back a little bit further, risk a little bit more. Now, I know a lot of people are going to look at this and say, Lan, why didn't you go in with 5 contracts? If you went in with 5 contracts, you'd be up to $500 already. It's very true. And you can work up to that. This is an education website. This is a education page. We're just learning right now. I'm not trying to dazzle you with brilliance and dazzle you with all kinds of thousands and thousands of dollars, and look how I made $1 million in 1 minute. That's not what this website's all about. That's not what this is. This is a Trade Mentors is the name of this this YouTube channel, and this is the name of my website. We're learning here. This is education. How can I trade? Where's the highest probability setups? Okay, this thing's flagging. We got stopped out. We only got $35 out of that trade, because it came back around and it stopped us out. It broke that previous high. So I did pull my stop in a little bit too quick. I could have probably left it there on the yellow dots instead of trying to pull it down one price bar back. So it came back, stopped us out, only to turn and start to flag. It's starting to flag to the downside again. And so this is another signal that we could take to the downside. See if we can't get back into this market and see if we can't get it to push through a little bit. Problem is, I don't like that position. I'm going to feel bad if it goes, but I'm going to get a little FOMO here. Look at the NASDAQ. I don't want to take a short position off of this flag on the Dow simply because the NASDAQ is being stupid. I may change my mind and put it back in there if the NASDAQ starts to show some weakness and starts to fall, but I would much rather have seen that thing push on through to a stronger downside and get at least, we should have got 4, 5, 6 more bars down, and we just didn't. So the market's being stupid. The only one that's being nice is that Russell over there. If we'd have been on the Russell and taken that one green bar and had that little, woulda, coulda, shoulda, but we're here to learn. We look at that little flag here on the Russell. Oh, my starting point moved. That would have been a decent place to get in right there. That would have been our buy signal, or our sell signal at this point, our entry right there, just like we did here. This was our entry. The problem is we got that one tail that came back and got us. So you can look at that and say, well, Lan, you came in, moved your stop too quick. Well, you're right, I did. I moved it in and it jumped down there, and then I tried to put it on the yellow dots, but the market came back and got us. It came back and got us before we were able to get any money, so we only up $35. That was basically a scratch trade, but better than losing money, right? But the market's being a little stupid right now. Look at that NASDAQ. Usually the NASDAQ is kind of our canary in the coal mine. That's the market we really want to see making nice trends, and then the rest of the market will generally make nice trends too. So look at how the Dow is falling apart down there. So good thing we didn't try to take that short position right there. And that's what reading the other charts can tell you. Now, look at the Russell. The Russell is breaking higher right now. And so a lot of people are going to say, oh, let's take the Russell long. We're going to get the reversal. Okay, go ahead, do that. I'm not going to do that. What I want to do is I want to see and confirm that it really is going to go long. And so what I want to see is I want to see it go up, break above the yellow dots. See that? It didn't even give us that green bar. We thought that was going to be a green bar. It's a clearing bar. So this one should be a flat bottom green bar. So we're watching for the Russell to have a flat bottom green bar that breaks above the ATR. And that could be a buy signal if you wanted to get aggressive and go for the reversal. I'm not going to do that. Sometimes we'll do that, but today, because I'm live, it's not the highest probability trade. So I want to make sure that it comes up, goes up, makes 3, 4. I want to see 4 bars, 3, 4 nice green bars, and then I want to see 1 or 2 small red bars, and that's my signal for entry to the long position. Because this thing could come along, make one or two green bars, then turn and fall once again, especially where the Nasdaq's getting ready to fall. So we might get that same thing over here on the Dow. I don't want to take a long position yet because we're in a downtrend. The trend is your friend until it bends or ends. Okay, there's plenty of opportunities to trade. You don't need to overtrade. Just make sure the trades that you do take are some that are going to be pretty decisive and the market really moves in your favor. And if they don't, just get right back out. Just don't take big losses. Don't sit through big, long drawdowns. That's the biggest reason most people lose money. It's because they get in and then the market starts to go against them and they don't get out. They just hang on to it forever. Now look, we're having this same situation where we got the Nasdaq is falling, the Dow's going up, the Russell's going up, the S&P neutral, static. Looks like it's trying to go up. No real volume in here. Look at the volume. It's all below the average, average volume price. There's not anything spiking up and staying above the average. We're not getting an increase. Okay, we're getting 2 bars here on the Russell. Okay, we got a reversal. We're now bullish on both the Russell and on the Dow. So now what we want to do is we want to see that continue through. We want to see that rally up. We don't want to see it get weak right now. If we got a weak market, we can't trade it. So we got a nice little reversal, only to have it, looks like it wants to fail down here on the Russell anyway. Okay. So just wait and see what happens. Market's being really lazy, really slow. I thought we'd have a stronger day today. I thought that we'd see some nice moves and some nice strength in the market, but we're not getting any of that today, this morning. Everybody coming back from their holiday, I thought maybe we'd have some action, but maybe wait until the news report that comes out. What happened to our news? Let's see if I can find that news. So we're getting ready for the news to come out. What is this? What time is it? 58. We've got 43 seconds until this news report comes out. So at 8 a.m., IBD and the tip economic optimism factory orders. You can see it's getting ready to populate right now. It's running their little blue lights. Let's bring this down. We'll watch the Dow and see if these affect the market at all. Probably won't change it much. Okay, we're getting another pullback on the Dow. Now the question is that going to be another downtrend? Is it just another downtrend, or is it continuation of the uptrend? Should be a continuation of the uptrend. But look at the Russell and the S&P falling. So we can't go long until we get a confirmation of the uptrend. There it goes. The Dow's given the confirmation. That's a little flag. The Russell is giving us 2 bars. I wanted to see that a bigger reversal. Two bars, 2 flat bottom bars before we get a clearing bar, and it's an inside bar, which is a worthless bar. So come on, give us our numbers. What time is it? 7. Okay, well, we got 7 seconds. Let's see if they have the numbers immediately or if they have to wait for a second. How quickly they can give us the numbers. There we go, right on the bell. So factory orders down. That's negative. That's bearish. Let's see what IBD tip economic optimism. Come on. So factory orders is down. That's negative. But the consensus was that it was going to be down 2.5 and it was only down 2.1. So that's actually bullish. Okay, it's not down as much as they thought it was going to be. So the Dow's starting to move higher. Look at the Dow go. Okay, all right. So I'm going to pull that off the screen. The Dow's starting to rally on that news that the consensus was minus 2.5, the actual was minus 2.1. So it's actually, the previous was 2.3 and it's minus 2.3. So it's actually down from the previous, but it's not as down as far as they expected it to be. Forecast was down -2 and it wasn't down quite full -2. Okay, so we're getting a little positive move here on this market's just sad. Look at the S&P. Topping tail, bottoming tail, topping tail, bottoming tail. This is market's dead. Please remember to ring that bell, subscribe and ring the bell so that we can be here together every morning. Come with me in the mornings. B. Taylor. Hey, B. Taylor. Let's see how this works. There we go. Hi, B. Taylor. Anybody else wants to say hi? Pull up your name, say hi. It's good to see you guys here in the room. Glad we got some people following along. As I was saying earlier, make sure you subscribe and ring the bell so that you know when we go live, because I don't go live all the time, but I'm trying to go live as often as I can in the mornings. Watch the morning bell at least with you guys, and then show you a few things that I like to do. I'm not telling you how to trade. I'm just showing you how I trade. And that's what I like to do, is just kind of show you how I like to do it. But it's just being too weak right now. There's nothing for us to do. I'm not going to take stupid trades. I don't want to teach you to do that. Oftentimes what we do when we're in an educational arena like this, we just take a lot of really stupid trades just to teach you how to do it. But this is not a teach you how to this is not a teach you how to use the software. This is to teach you how to trade. So we're going to just not take a lot of stupid trades. Okay. Oftentimes we take stupid trades just to say, okay, if you were going to take a short position here, this is how you would do that. And this is the tool you would use. And this is how we do that. But if the market's being stupid, I don't want to. You want to learn how to use the software and how to make these trades. I've got education. Go over to my website, tradementors.com. I got all kinds of wonderful classes you can take, and you can come and join me. You can join my President's Club. You and I will sit and work together one-on-one, and we'll do lots of trading. We'll practice lots of trading. But when it's this time of frame, there we're getting a little downtrend. So that would be if this market wasn't being so weak and stupid, that would be a place where we could take a short position right off that little trend. That little green trend's pulling back. But I'm not going to do it now. The market's being too weak. Look how weak it is. If I can teach you nothing else, I can teach you when not to trade, right? Teach you when not to trade. And right now is the time not to trade. Look at all the topping and bottoming tails. Look at all these things. That news didn't do any good for us. Look at all those terrible, horrible bars. We don't want to trade those. Don't trade those. Okay, you got your little pullback right here, down here on the Russell. See that little pullback right there? You're saying, well, that's a great place to go long. Well, not really, because the reversal was only 2 bars and then it died. Okay, we got an arrow that says the market should be bullish, but we're just sitting here in no man's land. We need, come on, action, action. We need a market that's got some oomph to it before we can start taking some positions. Now, this is a downtrend right here. We should be able to take a short position off of here, off this Dow, but it's just so weak. I want to see it push through, a little pullback reflection, and then another strong drop. We could try and catch this first trend, but it's also a little possibly uptrend. It could make the first rally, give us a couple little red bars, and then start to rally once again, but it's just going so slow. We need some. Okay, the Nasdaq's starting to pick up a little bit to the downside. We got a flat bottom, or flat top, 2 flat tops. Is this going to be a flat top? We got this breaking of this 1544 time level right here. The Dow's starting to fall. Maybe we're going to get a little action in here, but look at the Russell. Russell's dead. So that was our nice little entry, but it was just so the market had been so weak beforehand, I didn't want to take that short position. But here it goes. It's starting to fall for us a little bit. So I want to see like 4 nice red bars. Then I want to see 2 small green bars. That's when we'll take our next drop to the downside. I want to see some action in here. One of the greatest things you can do to help this channel move along is to leave a comment, not just here in the live chat, but leave a comment down in the lower. Oh, look at this. Look at the NASDAQ. It's starting to decide it wants to go long again. So see, good thing we didn't take a short position on the Dow, because the NASDAQ, the Russell, even the S&P is giving a little positive push to the upside, but just lots of indecision. We're not getting any good trading opportunities here right now. So leave a comment down in the comments of the YouTube thing, because if you do that, that shows engagement on this meeting here, and then YouTube looks at that and says, oh, people like that, they're making comments. And so then they'll invite more people to come with us next time. The more people we get in here, the more fun it is. The more people will have asking questions, and we'll have a good time. We just started this, I started this YouTube channel years and years ago, but just decided to start doing some live sessions here recently. So the live sessions are relatively new. So let's get some comments, get some people in here, get some action going. Now here we're getting a little bit of a drive to the upside, getting a little pickup. Look, we were thinking we were going to go down. Now we're starting to go back up again. The NASDAQ's going to go back up there and test that VWAP. The Russell wants to move up a little bit. The S&P wants to break that average true range right there. I know we want to see some trades happen, but it's just not, we're just not getting them. Peak right up in there. Just not getting any opportunities. And I don't want to take A1s. A1s is what we call them, the very first breakout. I like to take the A2. All right, so if you don't have my book, you can go out and get my book. It's out on Amazon, and it's called Stock Market Playbook of Strategies. And it's about 280 pages long. It's a really nice book. It's full of all kinds of really good, wonderful things. And so I'd like to see you go out there and pick up that book, and you can learn a lot of these strategies in here, the best ones anyway, the ones I like. And then lots of ways of trading the market. But look at that. We got a false break to the upside. Now we're getting a downside. That's nothing. This market's, well, the thing you're learning today is when not to trade. When a market's making lots of indecision and not good setups, then what we want to see is we want to see the market come in, and we want to see it make some good strong trends, a little pullback, and an ABC. That's our favorite trend. We don't want to sit here and play around in this no trending market, because this is what kills people. This is what rips your wheels off. It's easy to trade if the market's trending, because you just get your signal and the market goes. What kills you is this type of stuff. So look at the NASDAQ. It's just been dead all morning. There's nothing there. I'm excited to tell you. I wanted to tell you we had Pit News Magazine drop yesterday. First Monday of every month, we have Pit News Magazine come out. Pit News Magazine is my magazine. I'm the editor-in-chief of Pit News Magazine, and it's a really great resource for you. It's got some great articles that comes out every month. It's only $35 for an entire year. All right, $35 for an entire year. And the great thing is it's loaded with lots of great articles on how to trade and insightful information. But the great thing about it is that the articles come with audio files. So if you like to read, you can read them. If you like to listen, you can listen to them. If you like to read and have it read to you so you can read along with it, you can do that. Now we're getting a little action in here. Look at the NASDAQ starting to go. The S&P starting to break above the average true range. Let's see if we can get it to break up. So the NASDAQ is breaking above. But subscribe to Pit News Magazine, And come and join me with Pit News Magazine. The new version is really cool. Doc Brown put a great article in there. Doc Brown, of course, one of my buddies in trading, one of the guys on Trade Mentors, has a great article about retirement and when to take your Social Security. That's a really good article. You might want to see that one. And then Aiden Drake has a really great article. His article's about dealing with failure and why 80% of traders fail. And he talks to you about it. He says, it's not that they fail because they don't know how to trade. It's because they give up. 80% of traders fail because they just give up. At the first sign of failure, they give up. And he talks about different types of strategies and stuff. It's a really good article. Again, that one's got audio, so you can listen to it. But Pit News Magazine over at pitnews.com, you can go register for that. If you use my coupon code, LANLive-$1, LANLive, see that scrolling across the bottom? You get the entire year for $1. Saves you $38. An entire year. And it's an audio magazine. It's really cool. It's really cool. And there's video. I got an article in there that I talk about the money flow indicator, which we don't have turned on right now because generally we use that for longer term trading. But you can watch the money flow indicator. The money flow indicator is a really cool indicator that we talk about. And I have an article in Pit News Magazine about how to use the money flow indicator. And I've got a video in there that even shows you examples of how it's used. So that's really cool. We also have Claire Christensen, not Christiansen. She wants to make it very clear that it's Claire Christensen. Claire Christensen has an article in there about stock buybacks, and she reveals some pretty interesting stuff. Want to go see that article about if you're interested in about the price to earnings ratios in the stock market. She talks about that, and that's a great eye-opening article in there. Don't want to miss that one, because if you ever watch the earnings reports, she gives you some little insightful magic secrets on the earnings reports, something you really should know. No trader should be without knowing what she tells you on the earnings reports. So it's kind of an interesting. So Pit News Magazine, go try that out. Get that over there. Coupon code LANLive-$1, and you get an entire year for $1. Cancel anytime. If you don't like it, $1. Who cares? But if you do, I think you really like it. It's really an awesome magazine. And of course, my articles are in there. And of course, what I like to do is in my articles, I like to teach trading strategies from the stock market cheat sheets. So that's what I publish in Pit News Magazine. And those are always really fun. We're getting a little action in here. Look at the kind of getting a little bit of a Russell 2000 and the NASDAQ starting to run a little bit above that VWAP. But it's inside of the daily channel, right? We're still inside the daily channel. We're not getting any real strength here. So I haven't really felt comfortable taking a trade yet. We got that one trade off, made $35, got green. That's it. Let's talk about a word of wisdom. I brought something up here for you. This is called the Word of Wisdom. Another one of my books. Let's see. I don't want to do that. Let's get back here. See what I got. A word of wisdom for you here. We did a word of wisdom last week. This week's word of wisdom. Today's word of wisdom. All right. As a trader, I want to talk about our trader's state of mind. Avoid trading out of boredom. And so that's what, if we started to try and take trades right now, we'd be doing it out of boredom. Avoid trading out of boredom. This forces dumb trades, right? We trade out of boredom. This forces dumb trades. It's usually because of slow market conditions like we're having today. Don't chase productivity. Have realistic expectations. What do we mean when we say don't chase productivity? That's when you come to the market with an idea that I've got to make so much money today. I got to do this. I got bills to pay. I need to go out and I need to make some money. That's productivity. You got to be able to come to these markets and be able to walk away and say, you know what? It wasn't a good day. It wasn't a good morning. I'll come back maybe later. I'll look at the 10 o'clock bell, see when the 10 o'clock market's looking and see if I want to trade around 10 o'clock or wait till 9 o'clock. Wait for the top of the hours. Oftentimes, top of the hours is a good time to restart trading again. The big boys back in New York will oftentimes wait till the top of the hour. They'll have a meeting and they'll come out of their meeting and the meeting's over and they'll go say, all right, we were told we were supposed to go buy a whole bunch of this or go buy a whole bunch of that. And then it'll move the market, right? Top of the hour is oftentimes a reset. So you can wait for the top of the hour and then start to look to trade once again. But don't chase productivity. Don't chase a market. Don't say, I got to trade. I got to make a trade because I got to make some money. Okay. Can't have a day where I don't make any money, because that's usually the day where you end up losing money instead. And then have realistic expectations. I know there's guys all over YouTube that you can go watch. I made $14 million in 3 minutes trading this one strategy that you must know if you're going to ever succeed at trading. Whatever. Go watch those guys then. But, have realistic expectations. I think $500 a day is a nice beginner realistic expectation. We're going to try and make $500 a day, and we're going to have days where we're not going to make that. We're going to have days that, like today, where the market's just not making any trends. It's not moving. It's not shaking. It's not going to give us an opportunity. And so we have to sit on our hands. It's better to make nothing than to lose $500, right? It's better to make nothing than to lose $500 and have to make it up tomorrow. So have realistic expectations. Don't think you're going to start this game. Now, a lot of these guys make a lot of money. I've had trades where I've made a lot of money, and I've had trades where I've lost a lot of money. But what I find is when I have smaller, more realistic expectations, easier trades or easier goals to meet, I can have more consistent trading over time. So rather than being the turtle in the hare, where the hair's all over the place, making lots of money, losing lots of money, lots of money, losing all over the place. That's a hard way to trade too. Makes you nervous and upset. So if you just have realistic expectations, you wait for the perfect setup and you look for a market that's trending and making some new highs and new lows and wants to continue in those directions and not just do this little snaky thing. Don't trade the snaky patterns. They're hard to trade. So we want some nice active markets. And then once you get in, if the market turns and just starts to go against you, get out. That's the biggest reason why traders lose money, is because they get in and they're so sure that that they were right. They don't want to admit that the market's not going to go in the favor, that the market starts to take money away from them and they stay in, hoping that it's going to turn around, and then it never does. The problem is that sometimes it does. Sometimes you stay in and you get rewarded for bad behavior, and the market comes down and turns and you sat through a huge drawdown and then come back and you got back to break even, or you made money by holding on and you got rewarded for bad behavior. We don't want to reward you for bad behavior. Look at this market. We thought, oh, okay, we'll take the short position. Oh, now we're going to take the long position. Now we're going to take the short position. Now we're going to take the long position. It's just too choppy. This market's just too choppy. I need a nice smooth trends before I want to get involved. The thing is, you might have to wait 2 or 3 hours to make $500 in 5 minutes, right? Or 4 minutes. I made $3,000 in 2 minutes. Well, you might have had to have waited for 12 years learning how to trade before you could do that. I'm not saying that you need to wait 12 years to learn how to trade, but some of these guys who are making $14 million in 18 minutes, they're trading big accounts. They've been doing it for a long time. We're just starting out here. And this channel, this is for beginners. This is a beginner channel. All right. We're just practicing here. We're just learning. So come with me and learn, and don't have starry eyes for these guys that are telling you, I've got the one thing you got to know, and I made $14 million in 3 minutes. Okay, great. I'm glad for you. Happy for you. I'm not in competition with anybody. We're all traders, and we're all trying to make money, and we're all trying to do our best and trying to show what we're up to. I love everybody who's trading on these markets. I don't have any competition. We're just all out here doing our thing. Having fun trading. So have realistic expectations. Let's come back over and look at the markets again. They're starting to move a little bit for us, making a little bit of motion here, but not really getting much out of them that I'm excited about. This NASDAQ starting to give us an ABC pattern in here, but it's just, they're so weak. You think, okay, it's a down pattern. We're going to get a reversal and a reflection to the downside. Now it's going up and giving us a reflection to the upside. They need to make those reflections without giving a flip-flop on the arrows, without hitting the average true range. So we're still within the opening bell channel, and it's already almost an hour into the session, and we've got nothing. We took one trade, $35 is all we're up, and there's just nothing there. All right, guys, I'm going to call it a day for now. I'm going to go down, have some breakfast, come back at 10 o'clock and see if we can't find, not going to come back live at 10 o'clock, but I'm going to come back and take a look at 10 o'clock and see if the market's not started to move a little bit. Give it a little bit of rest, walk away. We've been here an hour and the market's doing nothing. It's just dead. So I guess the lesson today is know when not to trade. Know when not to trade. Subscribe, ring the bell so that you'll know when I go live. I'm going to try and go live again tomorrow morning for the opening bell, 7:30-ish. Try and get in here a little bit before 7:30, and we'll catch you then. Take care. Have a good evening. Have a good morning.